All right, today we are diving headfirst into the overconfidence trap. We're going to talk about those powerful mental biases that make us feel like we totally understood the past and that we've got a crystal clear vision of the future. Let's get into it.
So let's kick things off with a huge question. When you see someone achieve something amazing, are you looking at a true genius whose success was basically inevitable? Or are you just seeing someone who got incredibly lucky? To even begin to answer that, we've got to look backwards. We need to look at the stories we tell ourselves about things that have already happened. Because this, right here, is where our brains start playing some serious tricks on us.
I mean, just think about a classic success story, like the founding of Google. You know the story, right? The popular version we all tell sounds so simple, so clean. It almost feels like it was destined to happen.
It's the perfect narrative, isn't it? It just makes sense. It's a straight line from a brilliant idea to world domination. Every decision was a stroke of genius. And that story confirms exactly what we want to believe, that their success was just a natural outcome of how smart they were. But as the Nobel Prize winner Daniel Kahneman points out, that simple story is super misleading. It completely papers over the massive role of pure dumb luck. And get this, a year after founding Google, the founders were willing to sell the whole thing for under $1 million, but the buyer said the price was too high. We might tell that one lucky story, but it makes us forget about the countless other lucky breaks that had to fall into place. And that is a perfect example of what's called the narrative fallacy. You see, our brains are wired to hate randomness. We crave these neat and tidy stories where A leads to B leads to C. We build these narratives to make sense of the past because, let's face it, a world that's complex and random is just, well, it's a lot harder to deal with. And that gets a massive boost from hindsight bias. You know this one. It's the I knew it all along effect. The second something happens, it suddenly seems completely obvious and predictable in retrospect. And this bias is genuinely dangerous because it tricks us into thinking the world is way more predictable than it really is. It creates this powerful illusion that we can see what's coming next. And you better believe this illusion of understanding sells. I mean, it's fueled an entire industry of business books that promise to give you the secret recipe for success, right? The step-by-step formula for building a legendary company. But here's the problem. These so-called recipes are often just mistaking luck for skill. They're finding patterns that are really just a mirage. When you're dealing with that much randomness, a consistent pattern is probably just noise. And the proof is in the pudding, right? Years after a famous study like Built to Last came out, that massive performance gap between the visionary companies and the merely good ones, it had pretty much vanished. Okay, so we're not so great at looking backward and interpreting the past. But how does that mess up our ability to look forward? Well, it creates this powerful illusion of skill. Kahneman calls this the illusion of validity. It's that deep down gut feeling of confidence, that conviction that you know what's going to happen, that you can predict a really complex outcome, even when all the objective evidence shows your actual skill is basically non-existent. The world of finance is the perfect place to see this in action. Just turn on the TV. You'll see expert after expert, pundit after pundit, telling you with absolute certainty where the market is headed next. But here's the kicker. When researchers actually crunch the numbers, the results are just jaw-dropping. For most stock pickers, the correlation between their supposed skill and their actual results is basically zero. Zilch, nada. It's pretty much all down to luck. The confidence they feel is real, but the skill, that's the illusion. So, if our expert human intuition is so flawed so often, what are we supposed to do? When we have to make an important judgment, what's the alternative? Well, the research has staged a kind of showdown. Our complex, biased human intuition versus simple, basic formulas. The big difference? Our judgment is what you'd call noisy, right? Your decision might change if you're tired or hungry or just in a bad mood. A simple formula, it gives you the same output every single time. And the results? They're not even close. We're talking about more than 200 studies. 200 in all kinds of fields, from predicting parole violators to diagnosing cancer. And time again, the simple formulas make better predictions than the human experts. Now, of course, there are exceptions. Kahneman has a great name for this, the broken leg problem. If a formula predicts someone's going to go to the movies tonight, but you just saw them break their leg, you should probably override the formula. But the key here is that these black and white exceptions are way rarer than we think.
We experts tend to believe we're seeing broken legs all over the place, and that just makes our predictions worse. Okay, this is all pretty mind-bending, but how do we actually use this in our own lives? How can we make better plans and more realistic forecasts for ourselves? The answer is to get out of your own head. We all naturally get stuck in what's called the inside view. We focus on all the unique, special things about our project, our situation, and that almost always leads to crazy optimism. The trick is to force yourself to take the outside view and look at the actual data from other similar projects. It's a pretty simple 3-step plan. Let's say you're planning a kitchen renovation. Don't just trust your gut. Step 1, identify your reference class, in this case, other kitchen renovations. Step 2, go find the statistics. What is the average cost overrun, the average time delay for projects like this? That's your base rate. And step 3, use that real-world number as your starting point, your anchor, and only then maybe adjust it a little, very cautiously. So all this overconfidence and optimism, it sounds like a bug in our mental software, right? A flaw that we need to fix. But what if it's not a bug at all? What if it's a feature? I mean, just look at entrepreneurs. As a group, they're wildly, systematically over-optimistic. They truly believe they're the ones who will beat the odds. They take huge risks that just don't make sense on paper, often ignoring their competition and underestimating every single challenge. And this leads to this amazing paradox that Kahneman calls the entrepreneurial delusion. You see, while most of these hyper-optimistic people fail and suffer the losses individually, we as a society benefit enormously from all of them trying. Their collective risk-taking is what fuels innovation and creates progress. In a weird way, their overconfidence is the engine of capitalism. And that leaves us with one last really important question to ask ourselves. When you look at your own goals, your own confident plans for the future, is your optimism a superpower that helps you do amazing things? Or is it your biggest blind spot, stopping you from seeing what's really there?